Hi everyone, good evening everyone. Thank you for joining our webinar for today. Hope every one of you are doing well. My name is Brian from Philip Futures Marketing and I will be the speaker for today. During the webinar, if you have any question, do type them into the question box and I will address the question during the Q&A section at the end of the webinar. So before we start our topics, please allow me to introduce our company. As usual, I need to emphasize on our disclaimer where this presentation has not been reviewed by Security Commission Malaysia and is provided to you solely for general information and does not constitute any recommendation. We are not liable for any losses arising based on this information. Investments are subjected to investment rate, therefore you shall seek advice from qualification advisor before making any investment decision. So about Philip Futures. Philip Futures is a wholly owned subsidiary of Philip Capital Holding Sdn Bhd. It's incorporated on 7th of October 1995. Our headquarters is in KL and branches distributed across the Malaysia such as Kota Damansara, which is our branch, Malacca, Penang, Johor, Kuching, Cebu, KK. Other than that, Philip Futures is a trading participant of Bursa Malaysia Directive Berhad, clearing participant of Bursa Malaysia Directive Clearing Berhad, and also holder of Capital Market Service License as known as CMSL. I would like to take this opportunity to extend our gratitude behalf of my company, Philip Futures, to our clients. Without you, we are unable to achieve those awards in 2021. We achieved 3 awards from Bursa Malaysia: the best overall, best retail, and also best institutional directive trading participant. Our mother company, Philip Capital, has office and branches over 14 different kind of countries, included United States, France, Turkey, India, China, Japan, Vietnam, Cambodia, Australia, United Kingdom, Dubai, Indonesia, Thailand, Singapore, and also Malaysia. For futures, we cover not only product in Malaysia, we all cover from different exchanges such as Singapore Exchange, CME, CBOT, NYMEX, and more. With our strength of global coverage, clients able to trade both local and foreign product under the same platform, which is Philip Nova. So for the product available, Philip Futures main focus on product offering futures and CFD. For futures, we got index futures, metal futures, agriculture futures, energy futures, interest rate futures. For the CFD, we so-called contract for difference. We got Bursa Malaysia Top 100 Share CFD, Nasdaq and NYSE Share CFD, and also US Index CFDs. So why should you choose Philip? First of all, we provide advisory service such as inquiries. Next, we provide wide array of products for futures that enable clients to trade both local and also foreign products. Other than that, we send out our latest market news and commentary to our client daily through email for reference. Lastly, our headquarters have 24 brokerings and execution support. This is important for those clients who trade foreign futures because foreign futures normally will be dealing at night, and also the dealer can assist you inquiry at any times you want. No matter you are our clients or not, we offer free one-to-one coaching section, free seminar and webinars, and also free account openings. For free one-to-one coaching section, the key topics that we are focusing are introduction to futures trading, product knowledge, platform coaching, and also charting system. We conduct free seminar and webinars regularly, but since we do not have organized seminar at this moment, which is a physical seminar at this moment, we will be more focused to provide more live webinars with different topics for you to join. We have successfully launched the first futures trading online account opening in Malaysia. You can now open futures trading account online with no hassle. If you wish to open futures trading account online, feel free to visit our website, or you can scan the QR code right here, and it will directly link to the online account opening form. If you need any guidance on the online account opening, please do not hesitate to contact us. For free online account opening, you will receive a complimentary mobile and desktop platform at no cost, which used to access to a wide array of products. The platform for the futures trading is Philip Nova, which is commonly used by our clients to access global product. For the desktop version, is a web-based platform, but for the mobile version or tablet version, you can use the Philip Nova application you can download from Apple Store or Google Play Store, which allow you to trade anywhere, anytime. So let's go to our topic for today, how to get started on US indices. So this is our outline for today. First will be introduction to US indices, and then coming to the fundamental analysis on US indices and technical analysis on US indices, and lastly, the US index outlook. Do let me repeat again for those who came in late on our disclaimer earlier. Our disclaimer where this presentation has not been reviewed by Securities Commission and is provided to you solely for general information only and does not constitute any recommendation. We are not liable for any losses arising based on this information. Investments are subjected to investment rates. Therefore, you shall seek advice from qualification advisor before making any investment decision. So go to our first one, which is introduction to US indices. Basically, US indices can be divided to few, but for today, our webinar mainly will be focused on these three US indices, which is Dow Jones Industry Average, which investor will call it as Dow Jones or DJIA. Coming to the Standard & Poor 15, which call S&P 500 and also Nasdaq 100. So about Dow Jones. Dow Jones was founded and launched at May 26th of 1896. It's quite old already, and this is very trustable by the investor lah. So the constituents of 30 large cap stocks with top 10 holding represent of 54.2% of the index. So the industry of sector, basically Dow Jones Industry Average cover all the industry except transportation and utilities. For the weightage method is kind of important because it will counted based on what kind of weightage. For the Dow Jones Industry Average, will counted as a price weightage. Price weightage will mean the sum of the price of one share of all the 30 stocks divided by the factors. Coming to the market caps, for Dow Jones Industry Average market cap is 10.57 trillion. This is the data we get from the SP Global as April data. So the exchange will be NYSE and also Nasdaq. So there's a remark here. Dow Jones are widely viewed as a proxy for general reference to US market conditions. Since Dow Jones Industry Average are a combination of 30 stocks listed in Nasdaq and New York Exchange, let's see what are inside the Dow Jones Industry Average. So as you can see in the graph here, in the table here, the top 10 will be United Health Group, Goldman Sachs, Home Depot, Microsoft, McDonald's, Amgen, Capital, Visa A, Honeywell International, Johnson and Johnson. As you can see, all the companies here, I believe most of us know half of the company are here. So investors are quite, quite confident that these 30 companies are doing well in the markets. So this might be a very good sign to investor who know about this kind of company and then try to easier get the news from the markets. Next, as you can see in the pie chart for Dow Jones Industry Average sectors here, Dow Jones in the indicators in indices included IT, healthcare, finance, industrial, consumer concentratory, consumer slappers, communication service, energy, and materials. In the sector weightage of Dow Jones, you will realize that it will more focus on IT, which is 21%, healthcare 20.2%, and also industrial, which consists of 15.4%. But the next indices are a bit different, which is S&P 500. So let's see about what is S&P 500. So S&P 500 launched at 1957, which is the first US market cap weightage index. And then it consists of 504 large cap stock, but the top constitute make only up to 21.9% of the total. So this mean the top stock doesn't make like a big boss in this S&P 500 indices, so it's more diversified. So for the weightage method, the weightage method for S&P 500 is capitalization weightage index. The market capitalization for each company relevant to the index using the number of the share available for public trading. So we call it the float. Stock with higher capitalization and higher float, we have the higher weightage. So later I will show you an example of the top 10 stock in the S&P 500. So for the market cap for S&P 500 have 36.84 trillions as 2020 April. So the exchange will be the same as just now, NYC and Nasdaq, but it's a extra one which is CBOE, basically exchange. So there's a remark here. S&P is a leading indicator of US equities and widely regarded as the most accurate gauge of the performance of large cap companies. So after a few research, I couldn't get the weightage of the top 10 stocks, but this is the top 10 stock. As you can see, are included in S&P 500. The first one will be Apple, coming to the Microsoft, Amazon, Tesla, Alphabet, the two Alphabet, BioShape Healthcare, United Health Group, Johnson, and also Nvidia Corporation. As you can see, the weightage here mostly are also IT companies, which is we go to our next slide. So in S&P 500 sector weightage, IT, healthcare, and also consumer directionally play an important role. And coming to the finance, communication, industrial, consumer staple, energy, real estate, utility, and also materials. Next will be the Nasdaq 100. Nasdaq 100 was launched. Nasdaq 100 was launched at January 31 of 1985. We constitute of 100 or 102 non-financial large cap stock. Top holding represent of 53.7 of the index. Based on the weightage method, they are a little bit different from the other tools indices. For Nasdaq, they are using modified capitalization weightage index. The stock weight in the index are based on their market capitalization, with certain rule capping the influence of the largest company. Stock with higher capitalization and high float will have a higher weightage in the index. So as December 2020, the market cap goes to 15 trillion, and the exchange, of course, is a Nasdaq indices, so the exchange will be Nasdaq as well. And then there's a remark here. Nasdaq are heavily weighted toward technology companies. So I'll show you the weightage, the top 10 top 10 company of Nasdaq. First of all, just like the S&P, but Nasdaq are more focused on the IT company. So for the top 10, the first one will be Apple, coming to the Microsoft, Amazon, Tesla, Nvidia, Alphabet, C and A, Meta Platform, Broadcom, and also Costco Wholesale. As you can see here got 10 stocks here, but just only two companies are not related to the technologies. Not only that, Nasdaq are also known as the indices who most focus in IT lah, and consumer discretionary. In Nasdaq heavily rely on the news related to IT lah. So anything happen to the technology in the markets, it might reflect very fast in the Nasdaq 100 indices. Okay, let's talk about the pro and con when you investing in the US indices. For cons, investor who invest in indices are not the owner of the company, since you did not holding any share of the company, so you won't entitled for receiving any dividend as well lah. But in the other side, which is the pro, investors are exposed to US equity with just a single transaction by trading index. By just pressing one button, you are able to buy a lot of the share in the combination. So it will help you to diversify your risk lah. And also, investors are able to manage their risk or seeking profits based on their view of the overall market, but not just a company, because buying a stock just a company, but buying indices are a combination of few companies. So when you overview the markets, you can just buy the indices rather than buy stocks. Since we are already talked about the backstory of the indices, let's look into the type of index futures here. So for US index futures, there are two different sides of contract. The first one is E-mini index futures, and the other one is the one we going to talk and look into, which is micro E-mini index futures. For micro E-mini Dow Jones Industry Average futures, of course, as the name you can see, so the underlying asset will be Dow Jones Industry Average. So for the contract size are quite small compared with the E-mini size. So for the contract size for micro E-mini is 0.5 USD times the Dow Jones Industry Average. So for the price fluctuation, you can simply take a 1 basis point will be equal to 0.5 USD. So for the contract months, there are 4 months in the March quarterly cycle, which is March, June, September, and also December. Coming to the trading hours are quite important because in Malaysian time and US time are different. So for the Malaysian time, during the daylight saving time, the time will be 6 a.m. to 4:15 a.m. And then coming to the 4:30 a.m. to 5 a.m. When there is a non-daylight saving time, the time will be 7 a.m. to 5:15 a.m. And then the second section will be 5:30 a.m. to 6 a.m. So coming to the final trading date, which is the date you settle your positions, will be the third Friday of the contract month. So the settlement will be cash settled, and then initial margin will be 935 USD, which is approximate to 4,406 Malaysia ringgit. So this is the contract spec for micro E-mini Dow Jones Industry Average futures. So next we goes to the micro E-mini S&P 500 futures. As you can see, this is a S&P 500 futures, so the underlying asset or underlying instrument will be S&P 500 index lah. For the contract size, same as just now one. E-mini are quite big, but micro E-mini are 10 size lower than the E-mini. So the contract size will be 5 USD times the S&P 500 index. You will get the contract size lah. So for the minimum price fluctuation, is quite a complicated, but I'll simplify for you for 1 basis point. First of all, for 0.25 basis point will be 1.25 USD, an equivalent of 1 basis point equal to 5 USD lah. This is more easier for investor to track it on. And then coming to the contract months, contract month will be nearest 5 months in the quarter cycle, which is March, June, September, and also December. The trading hour are the same as Dow Jones, so we skip it forward. So and then coming to the final trading date, the final trading date will be third Friday of the contract month, and then it's a cash settle. But the initial margin are a little bit of difference. S&P have a higher initial margins, which cost 1,232 USD, which consists to Malaysia ringgit will be 5,364 Malaysia ringgit. So to the last contract specification is micro E-mini Nasdaq 100 futures. So the underlying instrument will be Nasdaq 100 index. Contract size are 2 USD times Nasdaq 100 index. And also it's a little bit complicated on the minimum price fluctuation. They are using 0.25 basis point equal to 0.5 USD. So which means that 1 basis point will be equal to 2 USD. The contract month are a little bit different from the just now one. There are 5 months in the March quarter cycle, including March, June, September, and also December. The trading hour will be the same, settlement and also final trading date will be the same, but there's a difference on the initial margins. Initial margins for Nasdaq 100, micro E-mini and Nasdaq 100 futures will be 935 USD, which you convert to Malaysian ringgit will be 4,406 Malaysian ringgit. Okay, so why investors should be trading micro E-mini indices rather than just trading E-mini indices? First, micro E-mini indices are 10 times smaller than of E-mini contract initial margin requirement, as you know as the low capital. It will use less money to trade the same value of the indices. Comes to next one, more precise and accurate hedging against equity portfolio due to smaller contract size. Since it's a 10 times lower, right? So you can use the advantage of 10 times lower. Maybe you can you're holding a 5 contract, but E-mini will make you hold a 10 contract. So it's more convenience to all the investors who look for a smaller contract size. And then the idea for beginners that haven't traded US indices before. So it's a good instrument to try before you go into the huge market, because it's a smaller size and more easier to trade, right? Yeah. So coming to the best of the same indices movement with E-mini contract with less volatility due to lower tick value, as the contract specification we said earlier. As we can see, they are 10 times smaller of the tick value. So lower tick value, that means less volatility lah. So if you are new in the US indices, micro E-mini indices are the best contract to you to trade off lah. And then coming to the as an alternative to test a new trading strategy before heading directly to E-mini contract, since it's a lower contract size. So people will try to test trading strategy in micro E-mini indices contract lah, rather than direct go to the E-mini contract, which costs a lot of money of there. And then lastly will be lower brokerage. Basically, with our promotion started from this month, the brokerage goes to even lower to 2.5 USD per way. So don't miss out the chance to join our low brokerage from Phillip Futures lah. Okay. Okay, let's talk about some things on the fundamental analysis. Before we start our fundamental analysis, do you guys have any question? You can type at the question box. I will address right now. Okay, I saw some questions here. What mean the basic point mean? Okay, do you mean the this one? Hold on now. Basis point. Do you mean the basis point here? Because for indices, right? For indices, we got a lot of indices, but they are different numbers. So when the indices increase by 1 basis point, you will get a profit of 0.5 USD. So this is the basis point meaning. So let's say you are holding a long contract, and then the current micro E-mini Dow Jones are trading at maybe 10,000, 10,000, and 10,000 increased by 1 basis point, which is 10,001. When you are holding a contract of micro E-mini Dow Jones at 10,000 and increased by 1 basis point, you will get a 0.5 USD profits. Yeah, and so on and so forth. So if let's say it increased by 10 basis point, you will get a 5 USD as a profit. Yeah, the other from, okay, are we using MT4 platform to trade? Sorry to say that we didn't use MT4 platform to trade. Currently we are using 3 platforms. One is called Palms Professional, is kind of like old platform. So we will suggest our clients to use Nova. Nova is more easier to use and easier to get, because you can get it through by using your mobile or mobiles or tablet. Okay. The promotion progress until when? Okay, for the promotion wise is until May, June, July, until the end of the July. Okay, I think I'll continue first. I will address the questions later when during the Q&A section. So maybe you guys have any question, you can write in the question box. Okay, so goes to the fundamental analysis, which is our second part. Oops, sorry. Okay, so I had listed out few factors that impact US indices movement. So for the first one will be the US economy data, such as GDP, gross domestic product, CPI, consumer price index, jobless claims, non-farm payroll, and so on and so forth. So those economic data have a correlation with US indices. Some of it might have a positive correlation, but some of it might have a negative correlation. So after this slide, I will provide some examples to you guys. And then goes to the second factors, which is the Fed Reserve policy and interest rate announcement. Any announcement made by a Federal Reserve will simply affect the US indices, because it will affect the monetary and also the physical policy, which mean the money markets, which is when Fed increase some interest rate or decrease interest, that will affect on the cash in the market. So it will affect US indices. So coming to the US corporate earnings result, so-called the earnings season. When the corporate earning result release, it will simplify affect the indices to shift high or lower. Higher meaning the higher of the earning of the companies, which include in the indices, we play a huge weightage. It will take a positive to the indices, which mean let's say currently are trading in Nasdaq hundreds, and then Apple announced that their profits get maybe 50% higher, and then Apple are playing an important role in the Nasdaq, because he's the top one shares in the Nasdaq indices. So when Apple release the good news, so it will bring positive impact to the Nasdaq as well lah. So this is the thing. Coming to the fourth factor, which is the US government policy might change by quantitative easing, which means printing money to help the economy lah. Like previously during the COVID pandemic, US government they print a lot of money, then make something like right now they are very high in inflation, that you will realize that the price of the consumer goods are increasing and increasing. Less people afford to buy all those goods. And then not only printing money, also increase corporate tax charge on selected sector. Let's assume that suddenly the US government, they decided to charge more money in Tesla because they don't like Elon Musk. So there's a huge impact to the US indices as well because most of the US indices are play high weightage in the IT sectors. So this is just an example, don't take it for real. And also coming to the trade policy, sometimes the trade policy will restrict the investor to trade in some certain market. So this definitely will affect the US indices market. So coming to the last one. Last one is the US dollar currency rate. The stronger the USD might bring more people holding USD and make USD product are more worth compared with the other products or investment with another currency, and vice versa. When USD drop, there will be bring negative impact to the US indices as well. Okay, goes to the next slide. Okay, this is the economy data that I said earlier. So let's go to it one by one. So the economy data will bring positive or negative correlation to the US indices. Let's go to the first one. The first one will be US non-farm payroll. It's normally released in the first Friday of the month. So if let's say you guys want to trade in US indices in the future, you might take a look on all these key data announcement. This is quite important because when the non-farm payroll increase, which means people are getting more money to buy goods or invest, so it will lead to the US indices increase as well. So you can see I put a sign here, which is a positive sign. So when non-farm payroll increase, US indices will be increased as well. So coming to the US Federal Reserve FOMC meeting. Okay, FOMC meeting, which is the Federal Reserve that decided to bring up or take it down the interest rate from Federal Reserve lah. Basically, it means that Federal they can decided that bank can lend more or lend lesser by increasing or decreasing their interest lah. So it doesn't have a correlation because it can be positive and also it can be negative. I will explain more in the coming slide lah. So coming to the unemployment rate, of course, during unemployment, there's a confirm the market are not doing very well. So it's a negative relationship. So when unemployment rate are high, US indices will be decreased. And the data announcement will be on the first Friday of the month. Next will be the initial jobless claims. Okay, the higher the jobless, and then the lower the US indices. Yeah, this is basically the same as the unemployment rates, but just an extra one to you to take note in. So the data will be released on every Thursday. Sorry. The next will be durable good order, which means people in the US are purchasing more goods. Yeah, it can be said like that. Durable good can be as a car, can be as a bags, can be maybe computers. So when the durable goods order are increasing, that will bring a positive impact to the US indices as well. And then coming to the GDP rate, the GDP rate will be announced every quarterly, but there's a delay for the GDP rate because normally they will correlated after about 1 month because GDP rates are very sensitive. So US government are very take care of it because the more GDP you have, they might bring high inflation. But when there is a less GDP, they might meaning to say that your country are not doing very well because GDP are simply meaning that people were willing to spend more. So this doesn't have a positive or negative correlation, but mostly government will maintain the GDP in the middle. Yeah. So next will be the consumer price index. So consumer price index basically to measure the inflations. People will say that inflation are not good, but sometimes or in a short time or period, it might be good, but cannot be that high and cannot be that low. So it also doesn't have any correlation between the US indices, and you have to like analyze yourself. Are these consumer price index are good for now? For example, like during the COVID pandemic, a high of consumer price index that will be definitely will be good. As you can see during the COVID pandemics, after 2 or 3 months, the US indices are getting increase very crazily. So their government did increase the consumer price index, but that consists of good during that time. So it's very situational. And then the last two will be manufacturing index, which means there's more manufacturing are doing. So the more the product getting more and more, the indices will increase as well. And then the data announcement will be the first business day of the month and also the third business day of the month. So let me give you some example of the positive correlation. As you can see, I get this graph from Fred graph. This is an example of positive correlation with providing US indices. This example will be using S&P 500 and also non-farm payrolls. So as you can see, when the non-farm payrolls during the pandemic, after the pandemic, the non-farm payroll are keep rising, increasing, and as you will see that S&P 500 will catch up on the non-farm payroll, which means both of these are getting a positive relationship. When non-farm payroll increase, S&P 500 will be increased. So this is a thing you should be aware of, and then getting the information from the maybe Google's or something. And then the other example will be negative correlation example by using the S&P 500 and also the unemployment rates. As you can see here, during the pandemic, people face that very high unemployment rate. So when high unemployment rate, the US indices did decrease. So this make it a negative correlation, but as you can see, the others like not very affecting. So as you can see here, this is the negative correlation between S&P 500 and also the unemployment rate. Yeah, basically that's all for the fundamental analysis. Next, I will go to the technical analysis. Before that, did anyone have any questions? Can address some question right now. Okay, let's see. Oh, there's a question. Contract size mean the number of contract we can buy. Contract size, hold on. Contract size, let's go back to. Okay, this will be easy. Basically, contract size meaning that the true size of the indices. Let's assume that currently you are the Dow Jones are trading at 10,000 as example earlier, 10,000. So 10,000 times 0.5 USD will become 5,000. So the actual contract size of the Dow Jones Micro E-mini Dow Jones Industry Average will be 5,000. But for the futures are a instrument that allow you to get a high leverage. So meaning that you by just paying 935 USD, you are able to trade instrument worth of 5,000. So it approximates to 5 times leverage. So basically that's the contract size mean. Okay. Yeah, that's all for the question. So I will continue to the technical analysis part. Fundamental. Okay, technical analysis. First of all, today we're going to talk about 3 ways to do a technical analysis. So for the first one, first one will be using the engulfing patterns. So what is engulfing patterns? Let me explain to you. The thing you saw on the left is called bullish engulfing. When bullish engulfing happens, meaning that the buyers are taking more control on the pricing rather than people who wish to sell. So the price are likely to go upwards. So take an example here. At the first day, the market dropped. So this is the open and this is the close. And then the market closed at this price. And then for the other day, the buyers would like to encounter the sales here. So they decided to buy the market to increase the market, increase the price of the market. So this is the things will happen. When bullish engulfing happens, the most likely the next day will be positive as well. So next day will be a green candle chart. So the other way around, vice versa. When there is a bearish engulfing happens, sales are taking more control on the pricing rather than buyer. So the price likely to go down. Uh, it might be very confused to you. So let's see some example with using the micro E-mini Dow Jones futures. So as you can see here, this is the micro E-mini Dow Jones futures. I had already draw a trend line, which is a downtrend. And then, so can you see this? Oops, this happened. This is what? This is bearish engulfing, which means the selling price take advantage, take more control to the compare with the buying price. So when this happen, it break through the resistance and it will keep dropping because the seller take more advantage on it. So when this happen, you can be shorting in the position to take a profit, because when you are taking a short position, you want the price to go down. So when the price go down, you can take a profit from here. So this is bearish engulfing works. Yeah. So this is the way lah. So coming to the next pattern. Next pattern will be double bottom or double top. When the double bottom happens, it might be a precursor of the price to goes up and take advantage on enter a long contract. So when a double bottom happens, you might consider to long the market at the low, because when double bottom happens in the time frame, it might goes up in the futures. So vice versa, when double top happens, double top with this is the bill, right? Double top will be like M. Yeah, double top is the same. When double top happen, the market would likely to go down in the futures. So let's see some example by using the micro E-mini S&P 500 index. Okay, I also draw a trend line here. So the trend line will be downward. In the graph, can you see any double bottom or double tops? As I saw a double bottom right here. So when the double bottom happens and it breaks through the moving average, and there is an increase in the price lah. So when you see a double bottom, you might consider to long the position to take the profit from there lah. So this is how we use the double bottom patterns. So for the third one will be more simply or easier. Coming to the channel. Channel is a combination of resistance trend line and a support trend line. So when two trend lines are created, there will be a sideway. When a sideway was created, there will be more easier to monitor the price lah. Let's see an example by using Micro E Mini Nasdaq 100 Index Futures. So I had drawn a two trend line here, which is a channel resistance and also the channel support. So let's assume that the price will likely to go down since maybe there's some market activity that happened and then dragged down the price, and then it hits the channel support. Normally when it hit the channel support, people would try to long the position here, long at the support line, and then try to sell at the resistance line. This is just like a example of the market will goes lah. So this is how people fully utilize the channel with simply just monitoring the price in this side way lah. Yeah. So that's all for the fundamental analysis, technical analysis. Let's go to the US indices market outlook. So for the US indices market outlook, we can focus on few things. The first thing will be the war between Ukraine and Russia. So there's a lot of multinational corporation in the US that derive revenue from the Eastern Europe. If the Europe countries slow down in the economies or having a war, many companies could experience a reduce in revenue. So when the company reduce in revenue, there's a bring a negative impact to the US indices as well lah. So if Russia continue to wage war on Ukraine, the revenue loss experienced by US company could send the stock price goes to lower lah, which mean the US indices will be dropping lor. So it depends on what kind of position you are taking. So if let's say you are taking a long position in the US indices, like maybe Nasdaq 100, the war are getting how to say it's getting serious. So you might think of to cut your loss, or when the war is getting more serious, if you are holding a short position, they might take advantage from there lah. So it's bi-directional lah. So the longer the wars, the higher the negative impact to the index US indices market lah. So next will be the federal fund rates. When Fed decrease the interest rate, meaning bank charges less interest from the borrower. When company can borrow more money from the bank, they will fully utilize the money lah, by just borrow and do research and development. So when the research and development happen, the sector who will take benefit will be the information technology sector lah. Such like Apple, Microsoft, Tesla, and these are the large cap company are staying in the US indices. As we mentioned earlier, US indices are take a high portion in the IT sectors. So when the Fed decrease the interest rate, there might be a good to the IT sectors lah. But vice versa, so it will take advantage when decrease interest rate. In the other hand, if the Fed announced to increase the interest rate, the technology sector will suffer and the financial sector will take advantage due to they earn money from the interest, right? because the financial sectors like banks, they lend money to people and then try to earn the interest. So the US indices with high portion of finance sector might take advantage on it, and uh, indices with high IT sectors will take a disadvantage when the federal funds decided to increase the interest rate lah. And also there is a news that say that federal fund rates that will be increasing five more times to increase the interest rate. So this is why IT sectors currently are doing a downtrend now. And also if you are holding a IT stocks or what, you may be consider to have a cut loss first or anything else. So in the futures, to against the inflation, Fed will increase the interest rate, might be goes to 2% or even worse 2.5%. We do know in the futures how does the Fed will be doing. Yeah, so this is the federal fund rates will. So we have to like keep an eye on the federal fund rates because it's really impact on the US indices. Okay, coming to the US COVID vaccination rate. So high vaccination rate only bring positive impact to the US indices market. But in the current phase, US citizens with 2 doses are only about 60%, and the people who had already their booster dose are just about 30%. Compared with Malaysia, right, US vaccination rate are quite far away. So if let's say there is another way of mutation of virus came across, and it might bring impact to the US lah, because their vaccination rate are quite low, right? And those are the things we might be concerned if you are trading in US indices lah. So these are the three factors that we should keep an eye on. So let's go to our conclusion. In conclusion, let's take a quick recap on today's topic. At first, we learned about the type of US indices and US index futures. Coming to the fundamental analysis on the indices and focus on what will affect on the price of the US index futures. And then the third part, we had discussed three tools we can use in technical analysis. First will be the engulfing patterns. Second will be a double top or double down, double top or double bottoms. And coming to the channel, which is a up or downtrend channel. Lastly, we discussed few factor we should be look into the futures because it might influence the US indices easily lah. So yeah, so that's all for today. So how to start trading US indices with Philip futures? First of all, you can open an account, and then after that you should know your risk appetite and then study the product of you interested in. Maybe it can be micro, e-mini indexes futures. And then understand the fundamental analysis and also the technical analysis. And then you can start your trading journey and then make sure you are always up to the date with the market. But no worries, if you are our clients, we will send a market commentary, daily market commentary to our clients' email lah. So you can have a quick look on that, and then some trading idea will be shared on the market commentary as well lah. And then don't forget to keep learning, because if you didn't keep learning, the market might surpass you, so you'll be losing money. And lastly, happy trading. So let's go to our Q&A section. For the Q&A section, I will let you guys to write some questions first, and then when you guys are writing some question, I will guide you some promotion that we are currently having right now lah. So for the first one, will be the awesome reward campaign. This campaign divided into two parts. The first part is the cash reward up to 400 ringgits when you start traded in FKLI, FM70, FCPO, or FEPO with term and condition applied. The second part is you can receive a one-time Food Panda voucher when you open up a Philip Future account and start trading lah. So this is the campaign called Awesome Reward lah. So if you are interested, you feel free to connect with us. And coming to the second campaign, I believe most of us will be more interested in this campaign because this campaign is called Trade CME Micro Futures at USD 2.5. As the title wise, you may know there's a US indices. US indices including Dow Jones, S&P, Nasdaq 100, and also Russell 2000. Coming to the silver, micro E-mini silver, and also all the treasury yield, all year treasury yield will be at a promotion rate of $2.5 per lot, with terms and conditions apply, of course. So do not miss out this if you are investor who trade CME micro futures lah. And then the third campaign, which is a yearly campaign called a Flip Star product. The promotion product including micro WTI crude oil, E micro gold, and also SGX China Air 15 indexes with commission at low as 3 USD. So this promotion will be last for the year lah, until the end of the years. So you can still enjoy if you like to join our open an account with us in the future. So how do you connect with us? You may connect with us now on Facebook, LinkedIn, or YouTube by just searching Flip Futures Sdn Bhd, and Telegram by just searching Flip Futures. So do like and subscribe our page. If you haven't, we consistently update our events, promotion, announcement, and also market news. Our recorded video will be also uploaded in our YouTube channel as well. And then this is our contact detail. Our branch is Kota Damansara branch. If you like to approach with us, you can contact with us. But if you are not staying in other state, you can also go to their branches as well. So this is the information. So let's go back to our Q&A section. Let's see. Brokerage promotion. I saw there's no question asked. So maybe I will give you some time to write down the question. If you guys have any question, please do write down and I will try to address your question. Okay, so I think there's no more question. So if you guys have any question, do contact us lah, and we are happy to assist you. Oh, I saw some question here. Oh, nice. So we only trade micro only? No, actually we did offer E-mini as well, but E-mini will be larger size lah. Micro will be more convenience to our traders lah. They can decide their own capitals that invest in micro or E-mini US indices. Yep. How about stock? US stock in CFD? Yep. For US, for CFD, there's some requirements to open up an account with USD that's set by Securities Commissions, with which is listed in our website. You may refer to that. But for CFD, you can invest in US stock, and also you can invest in US indices as well. But the leverage will be not that high compared with futures lah. Yeah. Okay, I think that's all for today. So I will end the section for today. Thank you everyone for joining our webinar for today, and also yeah, I saw some questions. What are the difference of ETF and indices? Okay, for the ETF, ETF might have various type, but indices are just there. How do I explain to you? As I mentioned earlier, indices can be like Dow Jones can just focus on 30 company and then with the weightage, but ETF can be included with the others like combination of Dow Jones and maybe combination of Dow Jones and S&P or something else. So indices will be more easy to trade on, and then ETF is something that managed by someone's. So if you like to trade by your own, I will prefer you to trade in indices. Yeah, I think that's all for today. Yeah, thank you all. Thank you everyone for joining and your time to joining our webinars today. So if you want to like have a quick recap, you can go to our YouTube channel and do remember to like and subscribe our YouTube channel. And all the webinars recording videos will be there also. If you miss out any webinar in the past, you may also refer to there lah. Yeah, so that's all for today. Good night everyone and also stay safe. Bye bye.